Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me live at MarketSite is Irv Rosenzweig. He's the president of RZ Wealth. We also have Blaine Alkin. He's the executive chairman of Fi360 and CEFEX. Thank you very much both for joining us this morning at MarketSite. And Blaine, let's kick things off with you. Seems like there's a lot of scrutiny today in regard to the use of titles concerning brokers, investment advisors, RIAs. We've got DOL, CFP, CFA. What's going on there?
Yeah, it's been a muddled situation in the regulation of advice for quite some time now. The original legislation that dealt with these matters was 45 to 85 years old. And so the intent back then was to separate the professional advisor from the salesperson. The professional advisor was to have fiduciary responsibilities to act in the best interest of the client, whereas the salesperson would have a lower standard overall. The Obama administration tried to do some things to tighten up the clarifications between the two, but the Trump administration's been rolling those back and other regulations as well. So right now, about the only thing that people seem able to agree upon is that you should be able to require people to say what they do and do what they say. So I think that's where title regulation is starting to come more into play.
Well, what's the difference between someone who's regulated as an investment advisor versus someone who's registered as a broker or financial consultant? Because many of these titles, they seem to be used relatively with each other these days.
They really do. So someone who registers with the SEC as an investment advisor is what I would call a willing fiduciary. They take on those fiduciary obligations. They know they're obligated to act in the investor's best interest. Whereas on the broker side, the traditional role is one in facilitating trades, and it's so they're subject to a lower standard of fair dealing. Over the course of time, things haven't quite worked out the way the legislation was intended. So we have brokers and advisors both calling themselves advisors, but there's a big difference under the surface. Even though the client might not understand the difference between the two, there is a significant difference in terms of the obligations for ethical and competent behavior on the part of the investment advisor versus the salesperson in the brokerage side.
Well, Irv, let's put some theory into practice here. You function in both capacities over 30 years in your career in financial services. How would you describe the main differences with two different sets of clients?
Sure. Actually, now that I think of it, there's three different rules. So you started off as a conventional broker, went to investment advisor representative under the firm registered investment advisory, and now my own registered investment advisor. And there is a difference in the rules, obviously, as Blaine alluded to. In a broker capacity, I mean, if somebody wants to do a trade or whatever, as long as you've done suitability check on them, then they're obliged to do the trade, and you have to carry that out. When you get to the level of registered investment advisor, it's almost like a big brother type of thing. You have to act as a fiduciary, and you have to do things in a prudent manner relative to how to treat the client. The issue is really the client confusion, as Blaine said again. All of these things are loosely referred to as advisor. And the client just does not know how to distinguish and does not know how the differences touch them in that regard.
Well, it sounds like there's also different training and registrations as well.
Right.
So what are some key considerations in regard to client engagement and services? Because it sounds as if it would be different than simply being a broker.
Yeah, it is. I mean, there's a good part and a bad part. I mean, first of all, the client should know that there really are no cross purposes. There may be some subtle conflicts of interest, like in our capacity, we actually have a general agency for the sale of fixed insurance, but that we feel that that's part of holistic financial planning. That somebody needs either a life insurance or disability insurance or things like that, but we need to disclose that for the benefit of the client. The client needs to effectively feel that there's no hidden agenda in their relationship with the advisor. And in reality, as a registered investment advisor, the best interests of the client dictate the relationship. That's it. The loyalty to the client is the key. That's the discerning factor.
Right, but there also has to be client expectations as well. So I would imagine things have to be said in terms of what they should expect from you or any RIA.
For sure. I mean, we've got customers that may have a very good gut instinct for trading. And they may call and they want us to conduct a trade for them. And frankly, we won't do it. Well, I'm not saying in all cases, but
right.
If we can't back it up, if it's not something that doesn't span through our book of business or something that we've done due diligence on. So yeah, we have to educate the client that in certain cases, we're not going to be able to do what you're asking us to do. And in that case, if they have a good gut, I'll tell them, look, if you want to have some fun, open up your own trading account, and that way you can realize your own type of trading strategies or things like that. But if I can't justify it, and if it's not something that I could honestly say would fit into the fiduciary role, I'm just not going to do it for you.
Right. So if you have, let's say, someone nearing retirement, and all of a sudden they want to buy, 5, 10 Bitcoin, that might not be appropriate for the particular portfolio that you're managing. But,
exactly.
So Blaine, let's go back to the impact of having these particular registrations. What impact does it make to the SEC and the industry overall to have these particular designations or associations, such as the CFA Institute? Are they helping to broaden that message in terms of what these designations mean for the industry?
Well, it is really critically important for the professional organizations to be involved, and certainly they are. Like CFA Institute, they have some 80,000 members. I was honored to serve as chair of the CFP board. There's certified financial planning professionals. There's another 80-some thousand there. Fi360 is accredited investment fiduciary. So each of these organizations have their own competency and ethical standards. So they tend to be the best of the best, tend to be the most productive also when working with clients. So I think these things are important, that the SEC listens to them and takes those types of input into account. But I do think we also have to realize that these are not organizations that donate to campaigns, so their views are somewhat more muted whenever it gets to the legislative front. So I think the bottom line is that investors should look for those who have higher designations, that have those kind of credentials behind them, and they should also ask if the individual that they plan to work with is in fact a fiduciary obligated to serve in their best interest.
Well, the architect of the Department of Labor Fiduciary Rule, Phyllis Borgi, she suggested that training programs need to be based on a fiduciary model, and that the rigor of education and training programs needs to be evaluated. So industry-wide, are things changing in this regard? And what certifications and training really do focus on the fiduciary standard? How do you pick out which designation works best for this model?
Yeah, it's a really good question, and I know Irv and I have talked a lot about it, and I think he has more to say on this subject as well. But certainly you look at the types of obligations that are associated with those credentials, and do your homework essentially to make sure that they are reputable and credible.
And Irv, I'm going to follow up with you as well. And I think we've had this conversation in the past. Sometimes you get someone's business card and they have 5 or 6 designations and affiliations next to their name. Does that suggest that they're great at taking tests and theoretically they get it? Or how do you explain that?
It shows a level of commitment. It shows that you have an interest in the well-being of the client. You've educated yourself. You've taken the time to do that. And you've taken the time every 2 years to basically seek that ongoing compliance that you have to do. So that's a big thing. I think Phyllis Borzi hit the nail on the head. I mean, training is key. If you have proper training, proper education, and actually from a firm perspective, proper hiring practices, you may not even need a fiduciary rule because you're effectively getting the people that know how to do their job. So that is a key part of it. Blaine's organization is excellent. I mean, I'm actually undergoing right now another designation because I don't think there's enough letters on my card. We'll put it on the back of the card. But looking at the AIF, which is Accredited Investment Fiduciary, and then aside from that, the other organization that Blaine is a part of, CEFEX, puts a seal of approval on the actual practice itself. And that's unique. I mean, that hasn't, to my knowledge, that hasn't been around before, where now it goes beyond the individual. It's actually how is a firm doing practices on a client-by-client basis, what's the consistency of those ongoing practices. So I think that's great. And again, think about it from this perspective. When I was a broker and the attraction of fee-for-service came about rather than commissionable accounts, you had to take a test, and then all of a sudden you became an investment advisor representative. Who really learned how to be a fiduciary in that capacity, even though they were supposed to be? Right. It was really the fact that Blaine and I both took our CFP tests very, very early. And again, they hit you over the head relative to fiduciary duty and the steps that need to be taken relative to, really assessing the client situation, and then also being obliged to be part of a code of ethics. Right. So now you're bound to doing the right, even if you don't quite understand it, there's a binding to the fact of how you do business and take care of the client in a fiduciary capacity. And I also think it's a great thing, too, that the industry is recognizing that continuing education is key to this as well, because the markets are not a stagnant vehicle. So I think what you're doing at CEFEX and Fi360
is really what the industry and investors need. So
Sure.
thank you for sharing
Sure.
that experience and wealth of knowledge with us. And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.